It's 3 a.m. on Wall Street, phones won't stop ringing, and traders are running through the hallways in panic while billions evaporate. Welcome to financial hell, where today you'll discover what really happens when the market truly collapses in real time. And I guarantee you one thing, it's nothing like what you imagine or what they show in Hollywood movies. It always starts the same way. Someone realizes something is wrong, could be an obscure hedge fund or a nervous junior analyst. But whoever knows first has the real power, and while you're sleeping peacefully thinking everything is fine, they're already selling everything. This is where the lie begins, because Wall Street doesn't operate with transparency like the manuals preach. It operates with insider information disguised as market intuition. The big funds have artificial intelligence systems that detect problems before the news outlets. Algorithms scan every tweet, every news item, every strange movement in the market. When they sell, they don't tell anyone or appear on CNBC giving warnings. They simply execute massive orders in fractions of a second without leaving a trace. And you? You find out about the crisis when you've already lost 30% of your portfolio and the damage is already completely done. Now comes the interesting part. When the market really starts falling, there's a hierarchy of desperation that few people know about. First, retail investors like you and me panic, selling at a loss while our hearts race watching the red screen. Then, medium-sized funds start liquidating positions to cover margin requirements and save what can still be saved from their portfolios. But the big players, the Wall Street giants, the billionaire sharks who move the market, they're doing something completely different at this moment. They're buying everything you're selling in desperation, accumulating quality assets at bargain prices while you cry over your losses. Wait, before continuing this revelation, if you want to understand how money really works behind the scenes, subscribe to the channel right now, because what comes next will blow your mind and completely change the way you see the financial market forever. Turn on notifications so you don't miss the next videos about the secrets Wall Street doesn't want you to know. And now come back, because things get even dirtier. While everyone is selling desperately thinking the world is ending, the sharks are buying cheap and accumulating wealth for the next bull run. But that's not all they do in this moment of chaos. They also do short selling, betting heavily on the decline and profiting from desperation. They sell stocks they don't even own, spread strategic rumors to increase the panic even more, and multiply profits from other people's misfortune. Is what they do legal? Technically, yes, it's within the rules of the game. But is it ethical? Well, that's a completely different conversation. In 2008, some hedge funds literally earned billions of dollars betting against the housing market, while millions lost their homes and dreams. They knew it was going to crash. They had all the data showing the collapse coming, and instead of warning anyone or sounding the alarm, they profited absurdly. The official market name for this is market opportunity. Simple as that, no guilt whatsoever, and within the perfect legality of the system. Goldman Sachs sold toxic securities to trusting clients while secretly betting against those same securities, knowing they would collapse and cause losses to their own clients. Later, they paid a fine of $550 million to the American government. Sounds like a lot of money. They profited billions from the scheme. The fine was operational cost. When the drop gets too strong and panic takes over, the exchanges temporarily stop to protect investors. These are the famous circuit breakers. Theoretically, these market circuit breakers exist to protect you, the small investor, but in practice, they only protect the large financial institutions. When the market stops for a mandatory 15 minutes, who do you think manages to reposition first and reorganize their entire investment strategy? The desperate small investor trying to sell their shares through a phone app while their internet crashes? Or the high-frequency algorithms connected directly to the servers? It's exactly during this strategic pause that Wall Street professionals completely reorganize their strategies, close losing positions, and open new profitable bets. While you anxiously wait watching that trading suspended message on the screen, they've already completely redefined everything behind the market scenes. When the market reopens for trading again, the game has completely changed face, and you're there still playing with the old rules. Now comes the part nobody talks about openly, but everyone knows behind the scenes. When chaos is total and giant banks are about to fail,
when the entire system is going to collapse and threatens to take the global economy with it, that's when the magical last-minute savior appears, the Federal Reserve. The American central bank, with the supernatural power to print infinite money, literally create trillions out of thin air with a few computer clicks. But there's an important detail. They don't save you, the ordinary citizen who lost their job and savings. They exclusively save the banks and financial institutions that caused all the mess. In 2008, they injected trillions of dollars into the financial system, while millions of Americans lost their homes in foreclosures and literally ended up on the streets. The same CEOs who caused the crisis with idiotic and greedy bets were not only not arrested, but received million-dollar bonuses paid with public money. But the banks were saved because they were too big to fail. That was the official excuse, while families went broke and nobody cared about them. It's the savage capitalism for the poor, who have to fend for themselves, and comfortable socialism for the rich, who always have a safety net. You lose your house after years of paying, exclusively your problem. Nobody will save you or care about your complete personal and financial drama. A bank loses billions on absurdly idiotic and irresponsible bets, immediate public rescue, taxpayer money saving the irresponsible suits in power. The system is literally designed this way from the beginning. It's not an accidental flaw that needs to be corrected. It's the intentional design working perfectly. After the dust settles and the news stops talking about crisis every second, comes the most fascinating and disturbing part of all this. Wall Street simply continues operating normally, as if nothing had absolutely happened, as if millions hadn't lost everything they had in life. The same executives return to the same luxury offices, the same mechanisms that caused the previous crisis continue operating perfectly, without any real change. Maybe they change some job titles to make it look like something was done. Maybe they create some regulations that on paper seem strict, but in practice are easily circumvented. But the real power structure? Completely untouched. The same players, the same manipulated rules, the same rigged game running in an infinite loop. Because Wall Street doesn't learn from historical mistakes like normal organizations do. It literally profits from them and transforms them into billion-dollar growth opportunities. Every crisis is actually a fantastic opportunity to concentrate even more wealth in the hands of a few, buy undervalued assets at bargain prices, and consolidate power. Eliminate smaller competitors who went broke in the turbulence, take over their clients and markets, and come out of the crisis much stronger than when they entered it. You think it's a system collapse, total loss, the end of an era. For them, it's just strategic portfolio renewal and market repositioning. So, how does Wall Street really work when everything goes completely wrong and the market collapses? Simple, exactly as it was designed to work from the very beginning. Chaos isn't a system bug that needs to be urgently fixed. It's an intentional feature, a planned characteristic that generates opportunities for those who know how to play. Extreme volatility isn't risk for those at the top of the pyramid. It's the greatest profit opportunity that exists in the modern financial market. And crises don't destroy the financial system, as it seems to those watching the chaos from the outside. They strengthen it and make it even more concentrated. Because at the end of the day, those who really lose aren't the ones who caused the problem with their irresponsible and greedy bets. It's those who naively believed in fair play. The hardest truth you'll hear today: there's no free and fair market for everyone, as they sell in economics books and political speeches. There's a manipulated market with completely different rules for different players, two weights and two measures operating simultaneously in the same apparently unified system. You can even participate in this game and try to make money. Nobody is stopping you from entering and risking your capital, but understand one fundamental thing. You're playing a game that's rigged since the first day of its creation, where the marked cards always favor the same house. If this video opened your eyes to the raw reality of the financial system, share it with someone who still believes in the fairy tale of the fair market. Subscribe to the channel now for more truths that nobody has the courage to tell, and turn on notifications so you don't miss any videos from behind the scenes of power. And now, tell me here in the comments with total honesty, do you still believe in Wall Street and the system, or have you finally seen the real game that's happening? Until the next revealing video, and always remember this fundamental truth: When the big players sell their positions, they've already profited absurdly before you even knew it. When you finally sell in desperation after seeing everyone else selling, you've already lost everything you had to lose in this round of the game.